This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Folks, you'll find the link in your Research Roundup email for this week's Postgame chart book. You're not going to want to miss the chart deck because we're going to be referring to the graphs and charts that it contains for the rest of today's episode. Again, that download link is in Research Roundup. If you don't have a Research Roundup email, that means you're not yet registered at macrovoices.com. Just go to our homepage, look for the red button that says Looking for the Downloads. Patrick, page 2, dollar index. This is the chart that I wanted to talk to in our market wrap. Sure enough, we're not back down below that yellow line at 96, but if we get a daily close below there, it's awfully hard not to start to think in a pretty bearish light about this chart. What do you see here? What do you expect?
When I look at this chart, I look and I say, really, we have not seen a major reversal of trend. I mean, there is no denying that the dollar had a blow-off going into that March event. And since then, it's been backing off. But we are entering a period where even if we break that 96 level, there is a very extended consolidation period that lies between 94 to 96. And arguably, even if the path of least resistance is for the dollar to immediately weaken, let's say the TGA account is, and the Treasury pushed the dollar lower. Maybe we see an impulse of the dollar index from 96 down to 94, or the euro makes that breakout to 117. These things can all happen on the very short term, but is that a major new trend? I'm not convinced yet. I mean, I think that while there is definitely room for it to weaken, I think that that could maybe still develop into a buying opportunity for the dollar. It'll be really interesting to see.
What would persuade you? What's the number? Is it 94.5, 94? Where does the daily close need to come in to tell you that this chart is really taking a dive to the south side?
Well, it wouldn't be necessarily just breaking of a level, but rather the way it behaves after it does, right? Because the first thing that you would expect is that if we saw that impulse lower of a couple Dixie points down toward 94, you would expect that buy on dip traders would scoop that up and get it back north of 96 in short order over the following weeks. And if we see that a breakdown like that is rather having failed rallies and remains very weak in price action, that would be the more concerning thing. So it's more about what would happen down there than it actually breaking a specific price level.
Patrick, let's move on to commodity futures on page 3. Looks like we are seeing a sustained breakout around that yellow consolidation range that you have drawn on the chart here. What's this chart telling you? What do you think comes next?
Well, a couple of weeks ago, we played the game breakout or fake out, and we were looking at the actual dip that was occurring there at the very tail end of June. And instead, commodities just started to rip. The dollar sort of rolled over, and these commodities all popped. And really, the next few charts is a series of commodities that I wanted to highlight that are all in line with this. And we were also, a couple of weeks ago, talking about those lumber futures as to whether or not that breakout was going to sustain. And not only did it sustain on page 4, but we broke out. We beat all the highs of 2019 and 20 in just one fluid motion. So, what is driving this demand for lumber and so many of these commodities? It's even when we look at page 5, we see that the copper prices have not only V-bottomed off of that big sell-off in March, but we're right up along those 2019 highs that were just under $3. And it really is, we're going to get a big tell to find out whether or not these commodities start to really break out here.
And if they do, Patrick, it certainly would be in line with the discussion we had with Hugh Hendry today in the feature interview about inflation and the trends that we're seeing in markets. We've got iron ore futures on page 6. Now, last time we talked about iron ore futures, you and I were uncertain as to what caused that big spike in prices in May, and we were inundated with listener emails explaining that iron ore comes not only from Australia, but also from Brazil, and it was the Brazilian iron ore production that was encumbered by the COVID-19 crisis that resulted in that big price spike in May. But it looks like after we got through that and came back down and consolidated for a while, it looks like we're seeing another breakout here. What's going on?
Well, this is the bigger trend, isn't it? And that I'm trying to capture here, which is one of the bigger drivers behind commodities tends to be a weaker U.S. dollar. And so the fact that we're seeing that U.S. dollar so weak and rolling down, all of these commodities are catching a really nice tailwind. And many of them are breaking out. And I guess they didn't get the memo about there being a global recession. But right now, definitively, iron ore is breaking to, again, a higher high. It's consolidated up there. It continues to behave very well. And what's interesting is that even when we go to wheat futures on page 7, we're finally seeing wheat, soybean, corn, all of them actually had an incredible week, breaking out of that descending channel that has been in place since April. And so commodities are all breaking out. So is this the beginning of a big new commodity move or not? It's one of the really interesting puzzle pieces to watch in the coming weeks and months.
Now, of course, we have not yet seen the S&P break out to new all-time highs, but holy cow, look at page 8 and the FANG Plus index. What's going on here?
Yeah, I really wanted to just highlight where that momentum is. And, throughout the years on MacroVoices, we had the opportunity to talk our listeners through a number of these bubble parabolic rises and inevitably their turnarounds and the corrections that come on the other side. And it's amazing to see that in the last week, we saw an actual acceleration of the steepness of the slope on these FANG stocks. Like the money is just chasing, the FOMO is driving this outright acceleration. It feels very similar to what we've seen in almost all bubbles, which is that the slope continues to rise and the speed of the ascent is actually increasing. Now, that one thing that you'll always point out about bubbles is the fact that these things, you don't really know how high they will go. When things get into this parabolic phase, it's always shocking how far they're able to push it. So in no way am I saying that the FANGs can't clear 5,000 and keep going, but it's definitely feeling very bubblish in terms of the rate of change and the speed from which this is ascending.
Now, what's driven Tesla on page 9 to this just huge blow-off in the last week? I've been reading a little bit about it becoming a popular Robinhood stock. Is that the driver, or is there more to it than that?
I wish I knew. All I know is that there is a fever going on for this Tesla. And it's amazing because it literally looks the same as the chart on page 8 for the FANG stocks. It's just an acceleration of this. And it's one of those scenarios where, Tesla, will it blow off to 1,500 and 1,700? Will we see this just continue? It is amazing to watch this rise. The premiums and the volatility premium is so rich. I know last time around you were throwing some of those call options out there. Are you thinking of writing a little bit this time around, Eric?
I don't know what to make of this, Patrick. It is just so crazy. As far as I'm concerned, Tesla still has a fair value of under $20 a share. It's never been worth more than that. But, I mean, just look at it. In the last week, we've gone from 1,000, which was a crazy number for Tesla, up 40% from there. It sure does feel like the beginning of a blow-off to me, but the question is, how high can it go before
and it can go higher,
the insanity ends? I mean, why not 2,000? Why not?
Listen, if all of our listeners are playing Tesla and they're playing that musical chairs, it's a greater fool thing, which is that you just need to make sure that you're not the one stuck holding the bag. Long as you can flip it to someone who's willing to pay a higher price, you can play. And it's just when the music stops, you got to make sure that you have an exit strategy, right?
Yeah, I think the music's going to stop very abruptly on this one. I'm not sure that it's time yet, but when it does stop, well, look out below.
So going on to chart 10, and this is where I think there's some really interesting divergences. So what we have is a basket of these stocks that are really getting all of the money flow. The FOMO is just pouring into these big names. That's where their performance is. That's where all the managers are getting their price action. One interesting thing, though, is that the Dow Jones Industrial Index didn't get the memo. What we continue to see is a scenario where we've seen most stocks have actually topped in early June. and we have not seen any of them have any sign of wanting to participate on the upside. The breadth continues to diverge from that. And with the fact that the yields are breaking down, like we talked about in the market wrap, it is really interesting to see whether or not the broader stock market will get another wave of buying. Maybe this is just going to focus completely on those FANG stocks, and they're the ones that will run in the last phase, and maybe the broader markets are already done. It'll be really interesting to see.
Patrick, talk to me about volatility and the VIX. We had that big spike up in the beginning of June again, and it looks like we're almost back down to the lows that we got to around the 1st of June. What's going on here?
Well, one interesting observation to make is that, during the entire bull market phase of the market, even prior to this 2019 part that I'm showing, the volatility during that premium selling regime that existed back then was very low. I mean, we rarely saw the VIX spike above 20, and it stayed down in the low teens throughout majority of that period. What is interesting is, in spite of the NASDAQ making higher highs, in spite of the S&P 500 being a stone's throw from its major highs, we have not seen volatility normalize back down to those teen levels. It's staying at a very sustained high level. One of the interesting perspectives on that is that I think everyone is expecting some volatility into the elections. And this is where, in the corner here, I have the term structure of the VIX, which you can see has that kink in it in the term structure going into that October-November election period. And so it's interesting that volatility is being priced relatively high, and then in the post-election period, we're seeing that they're already pricing in lower volatility. And so will this mean that this is going to be a sustained and elevated level for the next 3-4 months? It certainly feels that way, doesn't it?
And of course, if you really want to learn to master options trading and volatility, join Big Picture Trading. Info is available on page 12 about how you can get a free trial.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.